How much money have we lost because of COVID-19? Millions remain out of work, industries are losing billions, and that's just the beginning. Hello and welcome back. In today's video, we'll be taking a look at what economic losses the current COVID pandemic has cost us. This video is a point of view from a global perspective, as it's going to be much easier to understand how much the world has been affected. Stay tuned and watch the video right to the end. Coronavirus isn't just costing lives, it's also costing livelihoods. As the death toll rises around the world and the disease continues to spread throughout the United States, reaching numbers is hard to fully comprehend. It's costing the global economy trillions in lost income, business bankruptcies, tourism dollars, and more. So just how much money will it cost us when all is said and done? Estimates from Bloomberg in early March put the potential cost at $2.7 trillion. But that was before coronavirus was declared a pandemic. The United States and the rest of the world went on lockdown, and most European countries banned American travelers. Now, according to a report from the Congressional Budget Office released over the summer, those numbers have ballooned exponentially. The CBO predicts that the pandemic will shrink the U.S. economy alone by approximately $8 trillion over the next 10 years, which roughly translates to a 3% decline in the GDP. Here's a closer look at what this virus is doing to us financially, and will continue to do in the coming months and years. Airlines and hotels. The travel and logistics sector have been the hardest hit, says Andrew Schrage, CEO and co-founder of Money Crashers. In particular, airlines and transportation companies lost billions in market value since the beginning of the year. The shock is worse than anything that's happened since 9/11, Schrage says. Depending on how the extent and duration of the pandemic, the long-term impact could wind up being worse than 9/11. Airlines alone are set to lose at least $100 billion through 2021, according to the International Air Transport Association, and the trillions in government aid haven't managed to staunch any of the bleeding. The same goes for hotels, though they have started to do more business as people begin to travel domestically. An August 31 report from the American Hotel and Lodging Association found that nearly 2 out of 3 hotels are at or below 50% occupancy, and 4 out of 10 hotel workers remain unemployed. According to USA Today, furloughs are also continuing to translate into layoffs. And overall, the World Travel and Tourism Council predicts a possible loss of 197 million travel industry jobs worldwide, and a subsequent $5.5 trillion loss from the global GDP. The restaurant industry. The numbers are enough to turn your stomach. The National Restaurant Association estimates that the restaurant and food service industry in the United States alone lost around $120 billion in sales just during the first 3 months of the pandemic. As we all know, restaurants big and small continue to struggle, as dining still hasn't resumed fully in most places. And in the place where it has, capacity is significantly lower in order to accommodate for proper social distancing. If things continue in this fashion, that number could balloon to $240 billion by the end of 2020. Here's more on just how much money the restaurant industry has lost. Lost jobs. When businesses were shuttered, they weren't making money, which meant there wasn't any money, or at least there was less of it, to pay employees. Even the business that did remain open were negatively impacted by the shutdowns and the economy contracting. As a result, there were furloughs, then layoffs, and a general tightening of company purse strings, with some companies instituting pay cuts or eliminating independent contractors. While small businesses are particularly susceptible to the effects of people staying home, away from crowds and businesses, even big businesses have faced sometimes insurmountable issues. According to research from investment bank Jefferies, bankruptcies from big companies increased 244% in July and August compared to the same period in 2019. So how did all that translate to workers? In April, unemployment rates were even higher than they were during the Great Depression, notes the Brookings Institution, and more than 40 million unemployment claims were filed in the spring. While some of these jobs have come back, the picture is still not pretty. According to the U.S. Department of Labor's Bureau of Labor Statistics, 24.2 million people were unable to work or worked fewer hours in August because their employer closed or lost business due to the pandemic. While this is down from 31.3 million in July, it's obvious that still a monstrous number. On a positive note, these are the states with the most COVID-19 related hirings. Personal bankruptcies. Even before the pandemic hit, many people were living paycheck to paycheck in this country, and things were precarious. Add in layoffs, child care issues, and costly medical bills, and it's a recipe for disaster. Back in March, Healthcare.com and YouGov poll found that nearly half of insured Americans worried about the cost of treatment if they came down with coronavirus, and that was among insured adults. Their fears proved valid. According to the BMJ, problems have arisen with the cost of testing, repeat doctor visits, extended hospital stays, and charges for out-of-network healthcare workers, even when a hospital is technically in-network. But all of this hasn't led to an avalanche of personal bankruptcies just yet. Why? For starters, these medical bills are just starting to accumulate, so their effect isn't yet fully known. Also, in terms of unemployment-related issues, as the New York Times knows, the government's stimulus package helped keep people afloat. But unfortunately, that $600 a week in federal unemployment payments ended on July 31st. Now, bankruptcy experts say that a devastating financial storm is likely on its way. Here's what really happens when you file for bankruptcy. Sports were benched. It started with March Madness and quickly spiraled into the NBA, the NHL, the MLB, and US and European soccer. All of your favorite sports events were canceled for months. And here's a little perspective from a financial standpoint. According to Fox Business, the NCAA racked in an estimated $933 million during 2019's March Madness, when factoring in media rights, ticket sales, and sponsorships. And that's just for one college sports championship. Losses in professional sports may soar to the tens of billions, from lost ticket sales, merchandise, advertising, and more. While Major League Baseball and the NFL have resumed their seasons, and tennis and golf matches have forged ahead, all have done so with lots of extra COVID precautions and no fans. Ticket IQ estimates that the MLB will lose $5 billion in ticket sales, with the Yankees alone losing $175 million. Over at the NFL, a handful of stadiums, including Kansas City, Cleveland, Dallas, and Jacksonville, may allow fans at home games, but those numbers will be low. Jacksonville, for example, will reportedly allow only 25% capacity. FYI, these are the 6 places you're most likely to catch coronavirus. Disney lost and continues to lose billions. Before the pandemic, Disney World and Disneyland closed only a handful of times in their entire histories due to major world or weather events. While Disney World reopened in mid-July after a nearly 4-month closure, Disneyland's gates are still shuttered. So how bad has it been? In early August, the Walt Disney Company reported that it had lost nearly $5 billion due to the closure. Things likely won't be back to normal anytime soon, as visitors haven't returned to the reopened parks in full force, costing the company even more. Of course, these losses don't just affect the company, they also severely affect anyone working for Disney and in the surrounding areas, which rely on tourism dollars. The company furloughed 100,000 people in April, and while some of those jobs have come back, others have not. Take a look at these 12 photos that show the new normal of Disney parks. Late payments. Many businesses, large and small, have to wait for net payment terms before getting paid, says Stephen Lee, co-founder of invoice finance marketplace Crowds. With these types of global incidents, the delay in revenue further pushes out when a company gets paid. He explains the loss of revenue from companies, factory shutdowns, or stocks taking a hit, and fear of global catastrophes like coronavirus have a huge impact on business cash flows. Late payments are being seen across the board, with everything from car payments to credit card bills to rent and mortgages. The CDC recently issued a temporary halt on residential evictions through the end of the year, warning that evictions could contribute to the spread of COVID-19. Here's what to cut out of your budget during the pandemic. Thanks for watching.